This introduces just a really big idea to finance in terms of trading of assets. If anybody can be your liquidity provider, you're essentially disrupting a market that is controlled by, a few single entities. And why would people want to be, providing liquidity, and especially large Wall Street firms? Well, when you think about the assets that sit in your brokerage account, they're just sitting there as idle capital.
Somebody powerful holds a position, and a group of small players have got a big position enough to thwart them, which happens all the time. I mean, hedge funds do that all the time against retail traders. This was the first example where a group of retail traders did that against a hedge fund. So the centralized marketplaces tried to stop it, and they eventually got successful with it as well. This would never happen in a decentralized protocol like Uniswap. Michael, welcome back to another episode of The Rundown. Welcome everyone to episode 4 of The Rundown. We're completing 1 month of The Rundown, Michael. It feels like just yesterday we started this.
Amazing. Yeah, time is already flying. I think it's going to be a year before we even open our eyes up. I think, especially with kind of the market sentiment, and it feels like things are looking pretty good out there. So I do think time is going to fly probably over the next year. If you've been through a few different cycles, we know how things can speed up pretty quickly. Yeah, doing great. Hello, everybody. Yeah, great to be here for episode number 4.
Yeah. Do you think that the crypto community should thank us because we might be the lucky charm that as soon as we started this podcast, it's only been good news for the crypto industry?
Crypto just needs the rundown. I mean, I feel like that's...
I love that.
That's it. Shiv and Mike, peanut butter and jelly, bring it to crypto. Here we go.
Yeah, man. It's amazing all the news that are coming up, especially considering the events that had happened last year. It's so good that the people who continued on believing in this community continued doing the right thing among all the bad actors that were doing all the bad things to put the industry back to the Mt. Gox era. So it's great to see the price rises that we are witnessing. Bitcoin for the first time breached $40,000 this year. So it's great to see what's happening in the markets. Let's see whether this momentum keeps on until the end of the year. Great start to the rundown, I guess.
It's a great start to the rundown. I think we are the lucky charm for the crypto industry. And yeah, I mean, I wrote an article in the DeFi report, shameless plug for the DeFi report again, but yeah, I wrote an article just kind of on the setup for the next cycle. And I feel like it's playing out, and I'm still expecting the Bitcoin ETF, and maybe we're missing something here, but it does look like there's a lot of stuff happening behind the scenes in terms of administrative things where the ETF looks like it's going to be approved in the next month or so. That gets really interesting when you're already seeing sort of the market kind of warming up here. We may go into a period where you have these major Wall Street firms that are marketing. They've become essentially a marketing department for Bitcoin. That's one of the most fascinating things about Bitcoin, is that there is no CEO, there is no sales department, there is no actual roadmap, but it has all of these things. It has a global network of people that support it, that are evangelizing it. And it feels to me like Wall Street is actually coming into that structure, which is just really fascinating. That could be a whole episode on itself, I think. The setup just looks really good, and I'm excited to continue to just really focus on the fundamentals. I think another subplot of sort of where we're going here is new investable products coming into the market that are based on fundamentals as well. And that's something Token Terminal is very focused on as well, and playing a role in facilitating a lot of products based on fundamentals for crypto. And that's like the next kind of phase for the industry as it matures. And, super excited to be able to kind of educate the markets a little bit on that using on-chain data going forward. We got an awesome episode today. We're going to be diving deep into Uniswap. So yeah, super excited.
Yeah, that's amazing. So look, that's the feedback that we've got, right, through our shared audience, that they really love to deep dive into the on-chain analysis, which they don't generally get from other YouTube resources. And yeah, we are so thankful to Token Terminal for providing their data to us and actually doing some incredible work behind the scenes in making it so easy for people like us who don't really have that coding background, getting the nodes together, getting all that data into a visual source. So credit to them for making it so easy. And yeah, look, very excited for Uniswap. Uniswap, I've told you many times off the record as well, my favorite decentralized application that really shows the power of what decentralized application can do. And I'll tell you a funny story. So Recently, I had somebody on the podcast. It hasn't been uploaded till yet, but he's a gentleman. His name is Andrew Ward, and he's an Australian fintech entrepreneur. And I told him about Uniswap 2 years ago, and he has now created his own startup, but that uses the automated market maker concept of Uniswap, but put it into a centralized exchange system so that the liquidity providers can provide liquidity to secondary markets. I'll not go into detail because that's besides the point. But yeah, the point is that the idea of Uniswap is so breathtaking. And anybody who's new to crypto, who still believes that cryptocurrencies are just speculative and don't really have a use case, this episode is for them. Because Michael, using Token Terminal, his proprietary analysis through the DeFi report, is going to showcase some golden nuggets of information in this Uniswap, which I'm going to drill and deep dive into with Michael as well on the rundown. So, Michael, why don't we just go on chain then straight away?
Let's do it. Let's go on chain.
Let's go on chain with Token
All
Terminal.
right.
Cool.
All right, we are on chain. So maybe it makes sense here to just talk a little bit, Shiv, about just high level of Uniswap. You mentioned like you view it as one of kind of the breakthrough protocols in Web3. I feel the same way. I view Uniswap almost similar to how I think about like Bitcoin as like the first breakthrough in computer science, and then Ethereum taking that concept of Bitcoin and bringing smart contracts and making it easy for anybody to launch an application. Uniswap as sort of a core protocol for Web3. And I think the core value proposition and the breakthrough in computer science that they have introduced is really the ability to bootstrap a two-sided marketplace with a smart contract, right? So it's a permissionless innovation where you're pulling together two-sided marketplace of liquidity providers and traders using a smart contract. And right now, the business model is that the liquidity providers are being paid directly by the traders. We're going to get into some of the concepts here, but this introduces just a really big idea to finance in terms of trading of assets. If anybody can be a liquidity provider, you're essentially disrupting a market that is controlled by, a few single entities. And why would people want to be, providing liquidity, and especially large Wall Street firms? Well, when you think about the assets that sit in your brokerage account, they're just sitting there as idle capital. If you could provide liquidity to others with those assets and passively earn fees to do so, that gets, pretty interesting. And then when you think about how a Wall Street firm might approach that, they may provide liquidity as a way to hedge another position, or just to passively earn income. The other piece of this is that you can provide that liquidity and set a range on exactly where it can trade at, which of course is really important for setting slippage and getting into areas of trading where maybe I'm not an expert. I've had many conversations with people very high up in the trading world in traditional finance that have played around with things like Uniswap, who have confirmed to me that this is a breakthrough. This is something that's going to be really important for finance and potentially other applications for how to just sort of bootstrap two-sided marketplaces. But I think that's sort of what Uniswap has introduced to the world, is really this new protocol where you can bootstrap liquidity. Anybody can be a liquidity provider. And it's a protocol similar to how you might think about like voice over internet protocol or TCP/IP or some of these really base layer protocols. And just really exciting for like what this could potentially enable down the road. But yeah, I would love to get your thoughts just on like, what is Uniswap? Why is it important? And what could it potentially turn into in the future?
Yeah, look, a good question. I've always been fascinated with blockchain and decentralized protocols because of that word, that it's decentralized and it's, permissionless. If we go back to what happened with the GameStop saga, with the Wall Street bets back a few years ago, a lot of people have forgotten about it. There's a new Hollywood movie that has come out talking about that saga. But when we look at it, we notice that the centralized exchanges and the brokers, basically disallowed and banned people to take positions for GameStop and other of those stocks that were just ramping up, and one of the Wall Street hedge funds were losing money. I forgot the name of the Wall Street hedge fund, but it just lost money and eventually got bankrupt. That would never happen if its token listed on the Ethereum blockchain and it's enabled on Uniswap. So just because somebody powerful holds a position and a group of small players have got a big position enough to thwart them, which happens all the time. I mean, hedge funds do that all the time against retail traders. This was the first example where a group of retail traders did that against the H fund. So the centralized marketplaces tried to stop it, and they eventually got successful with it as well. This would never happen in a decentralized protocol like Uniswap. So that's one of the great things about that to start with, because the whole point of creating a decentralized exchange is that it should be permissionless, and nobody gets more powerful just because of their positional power. It's the market that dictates it. It's free market. So that's one of the biggest proponents that I really loved it. And secondly, the point about automated market maker, which I was pointing it out earlier, and which you have alluded to as well. Just a fantastic concept. If you look at, stocks that get listed on the IPO, you do a lot of book building at the back end. You get a lot of market makers to build liquidity for that stock. One can do the same thing over here by doing liquidity pool mining. If there is a new token that is getting listed on Uniswap, they can create a better incentive for people to provide liquidity to that pool, so that eventually, over time, the liquidity for that particular token gets increased. Because it's one thing to get listed. Listing on Uniswap is very easy. You just need to create a digital token on Ethereum. But it's another story on having liquidity for your token. And that's where the novel concept of providing liquidity pool mining comes into play. So just like a few years ago, initial exchange offering was a big thing, where people used to partner up with, let's say, the Binance or FTX at that time, or Crypto.com. They used to partner up with them to do the initial exchange offering. And in a way, those centralized exchanges used to guarantee the liquidity during the initial few days because they had a partnership. Something similar can happen with Uniswap, where they decide that the first 5% of their token allocation, the liquidity yield that liquidity providers are going to get, it would have like a 2x multiplier or 3x multiplier. And that's something that I believe we both have witnessed back in 2021. It used to happen with Uniswap. It used to happen with another aggregate protocol for DeFi. 1inch used to do that a lot as well. So yeah, like it's just a start. The innovations that people can do, the token economic incentives that they can come up with, it's like we've just scratched the surface, I believe. So it's a very exciting innovation out there, concept out there that I'm looking forward to. And like I alluded, one of my friends from Australia has used this concept in a centralized secondary market way. I mean, looking forward to see more, you can say, startups tokenizing their startup equity and creating liquidity, what would be called illiquid investments. Startups are illiquid investments. So
Yep.
Future is bright for this concept.
Yeah. And I think just to add on to it just a little, the thing you're always looking for with new technology is is this thing creating a new market structure, and is the tech actually creating efficiencies in the market? And so when you think about all the steps that happen when someone makes a trade on a traditional brokerage account, and all of the different entities that are involved with the transfer agents, the custodians, the brokerage, there's just so many sort of moving pieces. You have a liquidity provider or a market maker. When you think about a transfer agent and what that's doing when someone conducts a trade on a brokerage account, it's essentially the accounting of that trade. And what you have with something like Uniswap is a smart contract that handles that. And then the blockchain itself and your permissionless self-custody wallet is the custodian, right? So you just stripped out two major elements of the market there. And okay, so now where does that value go to, right? So that's kind of how I think of something like Uniswap. Super exciting, just sort of thinking about what this could turn into, but always looking for those efficiencies and then the new market structure, and Uniswap has that in spades. So maybe we should just kind of jump in here to the data. And so we're just looking at the 365-day fees, and in total, Uniswap has done almost $500 million over the last 365 days or so. And so when we jump over to Token Terminal's business model kind of layout here, so how does that, $500 million get distributed? What's the model here? So traders are coming on to the Uniswap platform, and how that works is you're just connecting a self-custody wallet through an interface, right? And now you're interacting with pools of assets in a permissionless manner. Those trading fees are being paid 100% to the supply side of the network, which is, if I'm trading on Uniswap, you, Shiv, might be the liquidity provider. And so my trading fee gets paid to you. And for you to become a liquidity provider, all you're doing is, again, same concept with your digital wallet, connected to an interface, sending your assets to a smart contract. This is all accounting, right? The blockchain is doing the accounting. The smart contracts are doing that accounting. You would receive a liquidity provider token in response. And then when you were ready to cash out, that is all the accounting of all the fees that you've captured is through that liquidity provider token that you receive for putting that in there. So it's a super interesting business model. And when you start to project out, where does this go from here? If you own the Uniswap token, is there a potential for a dividend payment and some of those fees that are getting paid to liquidity providers eventually being dispersed out to token holders? And that's really what, if you're investing in Uniswap, you need to be thinking about and projecting. And then Uniswap has a team that is developing these smart contracts, developing the protocol called Uniswap Labs. So they need compensation as well. Uniswap Labs actually recently turned on a fee if you trade through their interface. Right? There's a 15 basis point fee if you go through their interface. They turned this on about 6 weeks ago. It's creating a little bit of controversy, I would say, in the market, because that is not going to the token holder. That fee is going to the Uniswap Labs team and potentially their investors. It's done about $2 million of revenue over the last 6 weeks or so. And I think annualize that out, you're somewhere around $17 million for the year, which in a bull market, that could actually really pop pretty nicely. But this is really, and we'll get into some more of this through this episode, but that's really projecting out how big can Uniswap be. And if it's really, really, really big, and you're just taking a few of those basis points and directing them towards the token holders, some of it goes back to Uniswap Labs, and the liquidity providers can still be compensated. Now you've got a pretty interesting model, but I'll pause there to get some of your thoughts.
So look, first of all, let's get this clear for our listeners. At the moment, I think you made it very clear. Let's firstly compare the centralized exchange. In a centralized exchange, there are market makers at the back end that make sure that there is liquidity, that make sure that there is, sorry, your video got stuck, so that's why I got a little bit distracted. You're back now, cool. So yeah, there are market makers in the centralized exchanges that provide liquidity, and they get incentives by the exchanges to make sure that they continue to have a market for all the tokens that are listed there. Over here, anybody can be a market maker. In a decentralized exchange, anybody can be a market maker. They just need a decentralized wallet connected with the protocol of Uniswap, and they can become a market maker by depositing tokens to a liquidity pool. When there is liquidity within that pool, traders like yourself, like you gave in the example, can come there and actually trade. So they can just simply buy, just like they can buy Ethereum on Uniswap, just like how they buy Ethereum on a centralized exchange. All they are doing over here is they are buying it in a decentralized manner. The fees that you are going to pay, it's going to come to me, like you said. So in a decentralized exchange, the fees are paid to the liquidity provider, as opposed to where in a centralized exchange, let's take the example of crypto.com, you're paying the fees to crypto.com. You're not paying the fees to a liquidity provider that, in the back end is private or anything. So that's one important thing to recognize. Now, the second thing, which I would require your help now here, Michael, maybe we can move to that next step. What is the use case for Uniswap tokens? People, they speculate with Uniswap tokens. They buy Uniswap tokens, thinks that if they are generating a lot of fees, that means that all that value accrual is happening within the Uniswap token. They treat it like a stock market stock, so that they think that they are going to get dividends. Is that true?
Yeah, I think that's the investment thesis. If you're buying the token, you're buying it because you can see that, okay, there's a breakthrough in computer science. Uniswap has consistently owned between 60 and 70% of the entire decentralized exchange market, which is pretty interesting considering it's open source and that can be forked and things like that. But yeah, I think you're making a bet that, okay, this thing could get really, really big. And as long as the incentive is there for the supply side of the network to provide liquidity and be paid to do so, what could potentially happen if it gets really big is a percentage of that actually gets directed out to the token holder. You get a dividend payment. I don't think Uniswap has promised this to token holders, but that's sort of where this could potentially go. Of course, Uniswap Labs needs to be compensated as well. And they've just recently turned on that fee switch just on the interface. So they're basically making some money on their brand. And the fact that Uniswap is a trusted protocol, it has a Lindy effect. It's one of the sort of OG DeFi projects. It's been around since 2018. People trust it. And so they're coming to that interface. And that's one way for Uniswap itself to capture the value. But yeah, if you're a token holder, really all you can do with your token today is governance token that allows you to vote within proposals on, in terms of how the protocol is going to grow and expand and new markets that it's going to go after. You have an ability to vote in there. I will say that even with that, a lot of those voting shares are controlled by some of the large investors, venture capital within Uniswap. So I think that's sort of the investment thesis. I think it's a really hard, even though this thing is clearly, and we'll get into the value that Uniswap is creating like on various blockchains later on here. It's clear that Uniswap is creating immense value. I think as an investment thesis, it's one of the hardest projects to really come to like a really strong conclusion on like the value prop of the token itself. That's the challenge for an investor is, and how is the market going to perceive that moving forward? I mean, it actually brings into some interesting questions, like almost for like moving towards like a philosophical perspective, should Uniswap actually be valued based on the profits that can be distributed out to the token holder? Or is it possible that Uniswap should be valued based on the economic value creation it's creating for liquidity providers and for all the new pools that are being created? It's almost like when you think of like something like Uber, like is creating all this value for all the drivers and riders, like what is that actually worth versus just the amount that Uber, the company, captures? It kind of brings into some of those questions of like how to value something like this.
Thanks for giving such a detailed response. But that's like the important thing that the listeners should take away. Uniswap token at the moment, its use case is for governance. So unlike holding a stock of Uber, and then you would be able to enrich yourself by the profits that they earn through cash flow, that's not the same thing with the Uniswap over here. Because at the moment, if you have Uniswap token, that doesn't mean you're going to receive any dividends from Uniswap. At this present juncture, it might change in the future, but at the present juncture, if you hold Uniswap tokens, that doesn't mean that any revenue Uniswap Labs generate, you're going to be part of that. Uniswap tokens just enables you to contribute towards the governance of the Uniswap decentralized protocol. So just like how you get the shareholder voting rights when you own a share of a company, similarly, when you hold a token of Uniswap, you are then able to be part of the governance and vote on proposal or initiate proposals on how to improve the Uniswap protocol. But it's only limited to voting and the governance. It doesn't mean that any revenue that Uniswap Labs generate, you're going to get part of it. So that's a very important distinction that you need to realize. So thanks for alluding to that, Michael.
Yeah, no legal rights. Exactly. That's true for any crypto asset out there. So moving along here. So obviously quite a bit of value creation. If we zoom all the way out here in terms of total revenues that Uniswap has created since its inception, it's nearing in on about $3 billion of revenue. One thing that I always like to look at when I'm looking at the fees is token incentives. And so a lot of protocols will use token incentives, which we talked about in a prior episode, as basically a way to incentivize participation in their network. So it's almost like giving away freebies to get somebody to come in and trade. And if you see revenue only picking up when token incentives are picking up, it's kind of a sign that the project doesn't really have product market fit. And so if you look at this for token terminal here with Uniswap, what we can see is that Uniswap has like almost no token incentives, right? So the incentive for people to come in here and use Uniswap is the liquidity providers are being paid by the traders. So they don't really need to give away tokens to get that participation, which to me is a very strong signal for the business model. And, when I kind of toggle this back to the full zoomed out view here, we can also see where the fees are relative to where they were popping, during the last bull run here. So again, we went through this on a prior episode of just where we at in the market cycle right now. You can see here, it still looks like we're just kind of warming up just a little bit here. Anything to add on that?
Yes, so look, just quickly, I would add. So a lot of people, when they look at startups, or when they look at businesses, they talk a lot about unit economics. That, hey, how are you making money out of this? Tell me your unit economics. It's very common in venture capital. People ask that. Token incentives is a way, especially with reference to Uniswap, that it doesn't have any unit economics because this is what decentralized applications are supposed to do. Like when we started speaking about decentralized applications, it was all about one participant acting as A, and the other participant acting as B, and smart contracts enabling this transaction between A to B, where A gets the full benefit of enabling something for B. And this is what, Uniswap does. Liquidity provider provides liquidity, trader wants to trade using the liquidity provided by the liquidity provider. They pay the fees, all the fees goes to the liquidity provider, and the decentralized protocol just automatically through smart contracts does it. So there is no profit generation like what happens with centralized companies in this case. And that's why Uniswap is one of the best decentralized application use case out there. And that is demonstrated through this token incentive. Unlike what we see with other protocols, like last time you demonstrated Arbitrum, there were certain token incentive with that. There's token incentives with Ethereum as well, with the staking rewards. And for people who have been part of the play to earn gaming, just alluding to what Michael said, that if your fees correlate with the token incentives, you really don't have product market fit. And that's what a lot of people in 2021, 2022 saw with Axie Infinity, where token incentives and fees, went up and went down hand in hand. It was just not sustainable. It was just basically token incentives driving everything. And when that is the only thing that drives the market, you really haven't created any value. You basically have created a short-term gambling machine. So very valuable, and thanks to token incentives of Token Terminal to really showcase the power of this decentralized application, Uniswap.
Yeah, and I mean, I don't believe they've used 0 token incentives this year. They used a few very early on, but really nothing since. So always a good thing to look at. In terms of like the trading volumes of Uniswap, super interesting in that this decentralized model is starting to compete with some of the larger centralized exchanges such as Coinbase. And Coinbase is not the largest. Binance is the largest centralized exchange. But it is interesting to see that there is growing demand. You're kind of seeing is like this idea of Coinbase and Binance, some of these other centralized exchanges that have really kind of bootstrapped people on chain, right? Your initial interaction with crypto is usually a centralized exchange. If you set up a self-custody wallet, then now you can bridge yourself all the way into DeFi, and it's cheaper to trade on Uniswap than it is on Coinbase. The average trading fee on Coinbase is like 1.3%, 130 basis points, which is extremely high when you look at traditional finance. And so, everyone's thesis is that that's going to compress to 0. And that's why Coinbase has really been diversifying their revenue streams. It's about 30 basis points for the largest trading pools. So, 25% or so of what it costs on a centralized exchange. And it's much cheaper on Uniswap and some other pools. It can be as low as 5 basis points. So that's one of the reasons why people are using this. But you can see that the trading volumes, it's doing around $1 billion a day. And this is, like I said, close to where Coinbase is. If I zoom out, we can get another view, kind of market cycle and where we're at. We're seeing a little uptick here, and obviously still not quite where we were in the bull cycle, but at the peaks we were around 3 billion. Like we've had some days where we've hit 2.5 billion this year. So interesting to see that even in a bear market, Uniswap grew its user adoption even in that bear market. So another kind of positive signal for them.
So this is the dollar volume for the trading volume statistic. Is there a way to see the number of trades? Because obviously around 2021, price of Ethereum was double than what it is now. So that would have had an impact in trading volume as well. So is there a way within Token Terminal to see trading volume by the number of trades rather than the dollar amount?
We don't have it just yet, but I'm sure that's something the team is working on here. But that's a good point. These numbers can be slightly skewed because it's pulling in, the dollar value of the assets themselves. Well, yeah, we don't.
We owe it to them, right? To tell them the new additional features that they need to add anyway, because we are in a way their beta users and testers as well. So it's good that they're getting that feedback.
Yeah, if anybody at Token Terminal is watching this, that's on the product. Put it on the product roadmap, right?
Yeah.
But yeah, no, I mean, moving along here, I mean, you can another thing that is always kind of useful to look at active users. Right. So now we're looking at active users, daily active users. Again, you can see that throughout this like bear market, we actually are seeing more users going on chain, even though the crypto prices were obviously down. So seeing this is a very strong signal to me in like bear market conditions that they're growing, still pretty low, 125,000 users per day. These are unique wallets that are interacting with those smart contracts on Uniswap. But you can see like even, when we were peaking out in the last cycle, they were getting up to about 100,000. So we're over the peak of the last cycle. And like, we haven't even brought in a new wave of users to crypto yet in this cycle. So kind of an interesting data point to look at here.
Yeah, very useful.
And then just moving along, like it's always useful to like look at a project's treasury. And this is one we haven't talked about just yet, but basically what every crypto project out there will have a treasury that it's essentially an allocation of the initial tokens. So for Uniswap and a lot of these projects, they have around, I think Uniswap has 1 billion total tokens. A percentage of that will get allocated to the Uniswap Foundation. Some of that goes into a treasury where the protocol is using that treasury basically as an account where they can manage other markets, use those tokens. And as a token holder, you would have the ability to vote on how that treasury is used in the future. Always important to realize with treasuries is they're typically denominated in the native asset of the project, which makes this value right now, the treasury's at $2.5 billion. That's largely in the Uniswap token, which is obviously susceptible to market prices. So if those were dollars, that would mean that even if the Uniswap token went down in price for some reason, they still have $2.5 billion in their treasury. Obviously, that's not the case if there's volatility in the token. Of course, that number could go up quite a bit. In a bull market, the team could vote to say, hey, let's sell some of our tokens into the market. May not want to do that, right? That's sort of like a CEO selling the stock of the company that he's running. They could say, okay, let's sell a very small percentage because we want to go after this other market, or we want to integrate somewhere within the tech stack. And that's pretty interesting in how like a DAO could potentially use that treasury to build out their business.
So for people new to crypto or new to the concept of treasury in a DAO, just like how businesses have got their own treasury department where the CFO decides, in the case of MicroStrategy, where the CFO and the CEO decides to put all the treasury into Bitcoin. Shout out to Michael Saylor for his impressive Bitcoin evangelism. But yeah, just like how traditional companies put their treasury in order to fund their idle money by investing in, let's say, Bitcoin, or investing in treasury bonds with the US, or putting into other financial assets in a DAO, because since Uniswap is a decentralized protocol, it's effectively a DAO. It operates like a DAO where the token holders are part of the governance, which we have discussed earlier. So similarly over here, the treasury is all denominated, like Michael said, in Uniswap tokens prices. So if the price of Uniswap tokens rise up, you'll see the daily treasury of that particular day also double up because it's denominated in Uniswap token price. And yeah, that is a double-edged sword. If we are in a bull market, we see everything, all the token prices going up. It means the daily treasury on an aggregate basis, the price of that would be very high as well. But again, if we are in a bear market, we'll see it low. So it would be interesting to see, if you click on the max button, how does it look like since we are just coming out from a bear market? There you go. 20 to 2021, we had the bull market. We had the peak because it was denominated in Uniswap tokens. It had its peak at $19 billion. The price depreciated. That's why we're at $4 billion. Michael has got his Uniswap investment thesis. So I'm going to put you on the spot, Michael. Where do you see the daily treasury now eventually going with all the value accrual happening at the protocol?
That's interesting. Well, I think the Uniswap token was peaking out. So when it got to 18.5 billion in treasury, I want to say the token price was around $40, $45 or so.
Wow.
So the question is, where do you see that token price going in another potential crypto cycle? You could sort of back into the treasury there. So yeah, if you saw the Uni token, and this is not investment advice and it's not, my thesis, but if the Uni token went to $100, then you're looking at a treasury that's going to be close to $50 billion. And just to note on this, you're looking at the financials of a company, but it's all real time, right? In traditional finance, we look at these things and we can see how much cash is on hand at a business, and we can go to Yahoo Finance to do that, or the Edgar database. With this, you're just getting it in real time, which is super unique. And we think this is just something that is going to just totally change the way that financial analysis works into the future.
Yeah, I just want to say that's a super, super, super excellent and important point. Everybody out there who done their CFA and are equity research analysts waiting for the quarterly report to come out to then be able to analyze, or gambling with your statistics as to what could be the expectations. And then when it doesn't meet the expectations, we see a drop in the price. In a decade's time, all that would be dinosaur, in my humble opinion, because we will move to a real-time thing, and crypto is showcasing using tools like Token Terminal, paving the way of what real-time financial analysis looks like. So an extremely important point about the novelty that the crypto financial assets bring when it comes to the profession of financial analysis, and also just for corporate governance. When we look at stocks, we depend on auditors doing the right thing. We depend upon the officers of the company presenting the data and doing the right thing. And oftentimes, not a lot of times, but often you see so many lack of corporate governance, accounting creativity done, and then investors later on lose money because of the lack of corporate governance or negligence. That would never happen, at least from a financial analysis point of view, with crypto tokens, if people start using platforms like Token Terminal. So a super, super, super important point there, Michael, and I'm glad that you brought that up.
Just before we jump to the next segment here, like if you're a regulator, you essentially have everything in place to create like really, really strong investor protections when you have something like Token Terminal. And, you know, if I was a regulator and I was looking at this, I'd say this is really interesting when you can create a rule set around, you know, what it takes for a project to launch a token and come to market. It would make sense that that thing would have to list on something like Token Terminal. And then, you know, the investors have insights into the business model, all of this data to understand what they're actually buying. Super interesting. You may need to bring in a third party, and I think this is actually what we will see over time, a third party that actually audits the way that this data is presented. But yeah, I think it's super interesting where that's going. If I'm a regulator, this is a tool for me to protect investors, not something that is set up to, you know, there's more transparency here than you would even see in the public markets. I want to jump in. We talk a lot about, and a lot of the writings that I do are designed to analyze how value is moving through the tech stack and complexity with how a lot of these projects, if they're launching on Ethereum directly versus if they're launching on an L2, how does that change the economics of the business model? We're going to jump out of the terminal here, and I put together a spreadsheet just to sort of do some analysis on this because I think this is pretty interesting. And so one way to think about this is that Uniswap initially deployed the protocol on the Ethereum blockchain, right? So that's the first place they built Uniswap. That's where they initially attracted liquidity providers and traders. And so if we just kind of focus on this column C here, this is the financials and the impact that Uniswap has had on Ethereum itself. These numbers are over the last 365 days. And if anybody's watching this, this data was exported out of Token Terminal. So that's one of the nice features about Token Terminal. Everything that you look at on these screens that we present, that data can be exported into Excel and you can do much deeper stuff with it as well. So when you just focus on Ethereum, $402 million were paid out to the liquidity providers. Those were the liquidity providers that interacted with the protocol directly on the Ethereum L1. Now, we mentioned earlier, like when you bring something to the world, a new innovation, a new business, not only like are you trying to create value for others, but the value of that business oftentimes comes back to like, how do you capture the value that you created? With Uniswap in particular on the Ethereum blockchain, they're only capturing 45% of the value that they created. And the reason for this is that over the same time period, the last 365 days, $486 million of gas fees were paid to Ethereum validators coming directly from Uniswap protocol. The Uniswap protocol is the largest driver of revenue to Ethereum validators. 22.4% the economics of Ethereum came from Uniswap over the last year. And as I just mentioned, Uniswap is only capturing 45% of that, and 100% of that is going to the liquidity providers and not to Uniswap Labs, the team, or the token holders. So pretty interesting insight to say, okay, this is interesting. Like, how is Uniswap going to, and of course they're aware of this, like this isn't some groundbreaking information for their team. How do they start to capture more of that value over time? And one of the exercises, you know, as an analyst that I'm looking at is, okay, how do these economics shift with Uniswap deployed on an L2, right? So they're also on the Arbitrum blockchain, which is a L2. We covered that last week. And so when you look at what's happening here, you have $66 million that are getting paid out to LPs. Those are LPs that interacted through the Arbitrum L2. Now, the economics completely change here because the gas fees are so much smaller on the L2, where, you know, Uniswap is capturing 95% of that. At least the LPs are capturing 95% of that value. And then when you look at, okay, how much of the gas fees for Uniswap make up the total on Arbitrum, it's about 5.6%. So much, much lower. And Arbitrum has other use cases that are driving usage to the L2. But I think the takeaway here is just, how do you start to project what Uniswap should be doing? And like, are these decisions going to come back to the DAO? Is the team going to be proposing a lot of these potential decisions and how they handle this going forward? But you would think that they would be looking at potentially launching their own blockchain on an L2 that they can capture. This is really where the bulk of the value being created is. And this is like, a lot of this is MEV, which is probably a topic we can go to in another episode. But how can Uniswap capture more of this value they're creating? And this is really something that I'm sure the team is projecting out. One way that I think they could do this is they've got the protocol now on all these different networks, creating some sort of economic structure where they're able to capture fees or provide liquidity across these networks. I'm sure there's a number of different business models that could come out over time. The other thing is, like, I think where Uniswap is going is they're going to be a platform for potentially traditional finance, large players to come in and create permission pools on top of the protocol. And then they take a small fee for providing that infrastructure. But the breakdown is really just an exercise to say, like, how do the economics change when they're deployed on Ethereum versus some of these other L2s? And what could that mean as they build out the protocol kind of moving forward? But curious to get your takeaways from this.
Yeah, look, first of all, great analysis. So thanks a lot for sharing. And people should go and check out Michael's The DeFi Report, where he does fantastic deep dive analysis on all this. So thanks a lot for sharing this, Michael. Really insightful. Really love this spreadsheet that you have created. It's clean, concise. Love the insights that are coming from it. And let me just pick a few nuggets from over here. So yeah, I think the popular saying about product market fit that generally people say in startups that look for product market fit. A lot of people that I speak now and invite them on my podcast as well, I think it's shifting now. Now it's all about distribution first. Now you can build the distribution either by being a creator, or you can build the distribution by actually having a product market fit to start with, which is in the case of Uniswap. So it's clear that Uniswap has a product market fit, and now they got a distribution as well. Like you said, 60 to 70%. And there is one thing that I've noticed, whether it's in the Web2 companies, and it's Steve Jobs said it famously, the good software companies build their own hardware. And I believe in the blockchain era, the good decentralized application creators are going to build eventually their own blockchain. We saw that with Axie Infinity. It eventually didn't work out. It wasn't sustainable, but it created the play-to-earn gaming revolution. And then they created their own blockchain, Ronin, for that. So it wouldn't surprise me if the Uniswap DAO or Uniswap Labs team, either or, decide to create their own blockchain, a layer 2 blockchain that competes against the likes of Arbitrum, Polygon, and Optimism, and extract value from that. That could have various kind of incentive system. Some of that could go back to the treasury of Uniswap, or some of that could go entirely to Uniswap Labs, and it could be, like a profit-making venture for the venture capitalists that invested in Uniswap Labs. So a lot of things can happen. So this is a great analysis that brings those ideas into play on what could be the future of Uniswap Labs. The other point that I just want to quickly ask you to enlighten us, I mean, I know it, but for our listeners, if you can enlighten us, what is interesting to me is that when we see over here, let's take the example of Polygon, let's say. If somebody trades using Polygon on Uniswap, only 2.62% of that goes to the blockchain validator. And out of that, only $81,144 are being sent to the Ethereum validator. So am I correct in saying that the difference between the blockchain gas fee paid to validators for Polygon, which is around $500,000, so if we deduct $500,000 from there to $81,144.37, the difference between that, which comes out to about $428,000, so $428,000 would be getting paid to Matic holders, is it?
That's right. That's exactly right. That's how you would think about that. So the 509,000 is the total amount that gets initially paid out to those Matic validators, and then 81,000 of that gets paid to Ethereum when they commit the data from Polygon to the Ethereum blockchain. So that's kind of the breakdown of how all that works. And then, of course, Ethereum, not only does Ethereum capture value with Uniswap directly deployed on their L1, but they also captured this value down here, which is another $2.9 million. And that's these L2s putting proofs of the data onto Ethereum. Why are they doing that? Because Ethereum is the largest, most decentralized, most secure infrastructure. And that's kind of the use case of why Ethereum captures some of that value from those L2s. The other like standout thing here is the L2 margin for Polygon. We mentioned this last week a little bit. Polygon as a side chain, having its own network of validators, really functioning more like an L1 than an L2, has a much larger margin than something like Arbitrum or Optimism. But yeah, and we showed earlier the whole like $500,000 for Uniswap in total revenue. That's this top line here. That's the sum across all of the blockchains. And of course, Ethereum is about 80% of generating 80% of that is on the L1. So the other interesting thing here is that users, even though you can interact with Arbitrum and pay, much, much lower fees to trade, 80% are still on the ETH L1 paying much, much higher fees. So that's kind of interesting. And it shows you the power of these liquidity network effects that Ethereum has today. And I think the reason that they're still on the L1 doing a lot of the trading is because there's just more liquidity there. The pools are bigger.
So look, before we sign off on this amazing episode of Deep Dive onto Uniswap, and thanks a lot, Michael, for organizing this for us. I guess the most important thing now is to talk about, what are the key takeaways that you want our listeners to go with?
Key takeaways for me are really, what is the breakthrough that Uniswap has brought to the market? And to me, there's a number there. One of the big ones that I don't think we mentioned just yet is this ability to bootstrap liquidity for illiquid assets. And I think the market has this perception of Uniswap today as like this toy where these like shit coins are being traded. And I think that's true, right? That's specifically true for what we see today. But if you look at what's actually happening, is this is a breakthrough where we were able to bootstrap liquidity for illiquid assets. So when you look at the universe of illiquid assets and private market assets, there are hundreds of trillions of dollars of illiquid private market assets out there, and all that capital is tied up and there's nowhere to trade that capital. So there's a chance here that the direction Uniswap is going is it's sort of tackling that type of market. There's a number of different markets that Uniswap could potentially tackle. You have the foreign exchange markets, which are massive, massive markets. And we haven't mentioned it yet, but the Bank of International Settlements has been doing testing in foreign exchange markets using public blockchains and the AMM model. So it's possible that Uniswap actually starts to go after like these massive foreign exchange markets. It's possible that equities, tokenized equities could trade in here. The key thing is that, this model has not been blessed by regulators just yet. And this is very Wild West. You don't have to go through KYC and identify yourself to go through the Uniswap interface. You're just connecting your blockchain wallet, which is a, pseudonymous string of letters and numbers. Where this is actually going, I believe, is they will have permissions pools through Uniswap for traditional finance to come in. They can't come in here until that is enabled because there are rules where they have to understand the nature of their counterparties. You can't be on their trading potentially with somebody on a terrorist list, right? That's just a rule. They can't touch this. So that's kind of some of the markets, I think, that they're potentially going after. And that's kind of the breakthrough to me, is this ability to bootstrap liquidity for illiquid assets. And when you do that, you open up the market, you allow others to come in and provide liquidity, and you're disrupting sort of the market structure for market making in total. And we know how many assets are just sitting idle within brokerage accounts that could potentially be earning passive income as liquidity providers. So I think those are my main takeaways for Uniswap. I'm curious, what are yours, like just kind of looking forward here?
What you mentioned, illiquid assets for private companies, non-listed companies, that's exactly the idea that my Australian friend Andrew Ward has picked up from Uniswap. And that's what he has built now. And yes, bootstrap liquidity providing. I was just calling it liquidity pool mining. But yeah, that is like such a great use case, right? Previously, initial exchange offering used to happen. But now you can just bootstrap the liquidity like you were terming that. So yeah, a lot of good use cases with Uniswap. But yeah, look, for me, we haven't touched upon it, and for good reason, because this was more of a fundamentals perspective, first principles perspective on what Uniswap was for our listeners. But like you alluded to a little while ago, that 6 months prior, Uniswap decided to introduce a trading fees, which was quite controversial because some of the DAO members didn't wanted that. But then the venture capitalists that were backing Uniswap Labs and had, more of a voting share, They wanted that so that they can earn some, in a way, dividends from their investments. So I really think that the value is in the key insight that you showcased just a little while ago. I really think that Uniswap will create a layer 2 blockchain, very similar to how we saw Coinbase create the base blockchain. So we're going to see blockchains being commoditized. And it's an interesting world in the crypto world that we're going to see as to how the token prices are going to react when you've got all these blockchains competing for a very small user base initially, because we still haven't solved the friction problem. It's still very hard for a lot of people to create a wallet, connect the wallet, self-custody it, be okay with it. I mean, eventually they'll be okay with it, but in the short term, we still haven't seen that ChatGPT moment for crypto. So we both are going to actively monitor this. We're going to actively monitor the active user base of Uniswap to see what impacts. But for me, one of the key insights from this episode that I've taken is that I wouldn't be surprised if Uniswap creates its own blockchain to extract most of the value.
That's certainly a possibility. There's a number of different angles they can take here, but we have seen the first step that they have taken to finding a way to monetize themselves, and that's really through their interface. And so that's where they have the relationship with the user is through the interface. And that's very clear. One of the reasons they built a wallet is because that's another spot where they can control the user and potentially extract a fee or something there. So it's interesting to see how they're sort of integrating across the tech stack. But if you have your own blockchain, the relationship with the user is always going to be at that interface level. And that's where their brand, trust, those things come into play. And I think they have that based on their 60 to 70% market capture of the total DEX market. So certainly it'll be interesting to see where this goes heading forward. But I think that's probably it for the episode. What do you want to talk about next week?
Since we are getting a lot of requests around, how to position themselves in the new year, 2024 is right on the corner. And you've done crazy analysis at DeFi Report always. So why don't we do an episode next week on what to expect with Bitcoin in 2024 with all the news that are coming. So how does that sound? Bitcoin in 2024.
I love it. Yeah, let's do the setup for Bitcoin. Obviously, there's quite a bit of interest with the ETFs. Looks like we may see an approval, hopefully, in the next, 4 weeks or so. So I think that makes sense. Let's do Bitcoin next week.
Amazing. And look, Michael and I, we are your friendly neighborhood crypto people. So if you've got any comments, if you think that we should talk about anything else or episodes, just put a comment there, either on LinkedIn or on YouTube or on Substack or on Spotify. Just put your comments out there as to what we should talk about, where you get the most value, because that feedback would really help us to drive our content. And our purpose to do this on week basis, thanks to Token Terminal for their data as well, just to provide value and to enlighten you all on seeing crypto from a fundamentals perspective. So not drawing lines on a chart, doing fundamentals quantitative as well as qualitative insights to you guys, just like we did with Uniswap today. So leave a comment below. And if you really like it, say thank you as well. Thank you guys for doing this, because we do a lot of hard work. Michael does a lot of number crunching to do this. I wake up at crazy hours here in India to do this. So yeah, I hope you guys enjoyed it. And it's a bye from my side. Anything from your side, Michael, to add?
I think that's it. I may use that when I go to holiday parties, this season. I may say I'm the friendly neighborhood crypto person. Maybe that's how I'll describe what I do in crypto. But no, I think that's it. Yeah, like you said, it'd be great if people provide feedback. We've had some feedback on YouTube, on LinkedIn. It's super helpful for us. We're super early in this and we have big plans for this show. So yeah, super excited moving forward. Thanks everyone for watching, and we'll see you next week.
Amazing. See you guys.